What's going on, everybody? Welcome back to Chart Request Live. My name is Patrick Dunawilla. I'm the editor of the Chart Report. We got Sam Gatlin joining me today. Sam's going to be on the charts. Sam, how you doing?
I'm doing good, Patrick. There's a lot going on, so I'm excited to be here with you.
As always, seems like there's always we're always waiting for that next puzzle piece, right?
For sure.
Um, you want to start it off with the broader market? What do you think?
Yeah, I think the S&P 500, this is kind of front and center for me right now. This closed at a new all-time high yesterday, and you're seeing the bears step back in at this crucial level of former resistance from early December, late January, and some in February also, but you really, if you're an equity bull, you need to hold this line here at about, let's call it 607, 608, and that's exactly where you are right now,
Yeah,
this
yeah,
second.
kind of
So
throwing it back.
for sure, this could end up being a long lower shadow by the close today. Let's find out, but. Recently we've seen some really strong closes in the S&P 500. I believe it was this day, Tuesday, February 18th, where the day just kind of looked gross, and then right at the end of the day, they came and pushed it to a new all-time high. So
Yeah,
so that's what you
and
see in bull markets.
yeah,
Is
and quite the change of character
Yeah,
to what we were seeing earlier this year, where we were seeing a lot of sell-offs into the close, sell-offs into the end of the week, that type of behavior, right?
definitely. Yeah, you close
So
strong in
listen,
bull markets.
we got a pretty stuffed mailbag here. You want to dive right in?
Yeah, let's get to it.
Let's start off with AVPT.
This
It's
is
a
the
$3.3 billion data processing.
Yeah, this is a sweet setup. Super actionable here today. Um,
Earnings in about a week.
yes. From New Jersey.
Hey,
So this is AvePoint. It's rallied about 450% since it bottomed in late October with the broader market. I already have it fibbed out, um, conveniently enough, and you broke out to new all-time highs in November. And then got a nice little whipsaw back in December and January, and now the Bulls are taking control of it, trying to reassert the primary uptrend. So if AvePoint can hold this 18 level, I think you could really call it. Man, I almost want to use a line chart with this one.
yeah, I think that's probably the way to go with it, right?
Yeah. Yeah, so something like the 17 level. You got a
Yeah,
quick shake below that in January. And that's a classic January thing you see. We call it whipsaw hunting season around here, but the market has a tendency to whipsaw traders around crucial levels like a shelf of former highs at the beginning of the year. And then once that range is resolved, then you get the true direction of the trend. And in this case, I think it's higher for this AV point. This is a sweet chart. So above 18, I think next stop is 26 and a half, 27.
I like it. That is quite the base, right?
Yeah, it is. This
From
is sweet
$3 stock to I mean, it
for
hit
sure.
almost 20 recently, right?
Yeah, this is really
Um,
nice.
Listen, this one isn't in the mailbag. I'm going to skip out for a second because we got a couple people asking about WGS.
Hey, wow.
Yeah,
That's my specialty.
yeah,
I
you've been all
love this
over this
company.
one.
This is so good. So this is GeneDX. This was the best performing stock last year. And since it bottomed around my birthday in 2023, the stock has
Best performing
rallied
stock in
in
what?
the entire world. No matter how you measure it, this is the best performing stock.
Is that right?
Yeah,
Wow.
yeah,
From 1 to 100. Wow.
yeah. This thing's a beast. It's rallied about 7,000% off these lows from late 2023. And about every time it comes out and reports earnings, it rallies close to 50%. And you got another one of those candlesticks on Tuesday, close to 50%. You got 47 and a half. And then if you go back to the Q4 2024 earnings report, it was about 50 on the nose. So this thing is an absolute beast. The market continues to not respect what they're doing here. Whenever you see a stock consistently rally 50% after it reports earnings, you have to question why that happened in the first place. Are these markets really efficient? Or like, seems like some people are pretty skeptical of this uptrend, and this WGS keeps climbing the wall of worry. So really, I see no reason for this one not to head back to this former high from early 2021, which is around $900, and that's about a 9x from where we're at now, which kind of sounds aggressive, and that sounds like a lot, and I understand that, but just understand the context of where this has come from. This is up over 7,000% in a matter of less than 2 years. So what's another 900%?
Yeah, what's another 900, right? That rate.
I think that's really the way to look at it, though.
No,
right?
yeah. And to your point about climbing the wall of worry, I mean, short interest still 7.8. I mean, it's not super high, but still for a stock that's hitting new highs and on a tear, sure wouldn't want to be short this thing.
No, that sounds like a lot of pain. I don't
Alright,
like to inflict pain on myself as an investor. I like to make it easy. Just ride the trend. The trend here is clearly higher.
Let's hop back into the mailbag and go to Columbia ETF, GXG.
Sure. So let me pull up my stats on what we have going on here. So Columbia, you have 29 holdings in this ETF, about 41% financials, 19% utilities, 15% energy, 11% materials. That's what you have. And yeah, a lot of banks really. So if you have some of the worst banks in the world rallying to new highs, I'm talking to you, European financials, then you got to be bullish on financials, and that just and it's not just about American financials or European financials or Japanese financials. That includes Argentine financials and Colombian financials and Mexican financials. It's all one trade. So I think that's really what's going on here with this ETF. I'm not really sure how to mark this up. It's just, I think ultimately the bet here is GXG gets back to this shelf of former highs from 2022. And you can be long above this pivot high from 2024, the spring of 2024, and that comes in right around 28, which is exactly where we are today. So this is super actionable. I like it a lot. I think you could even call it a cup and handle also. Looks a little something like this. Here's your cup, and then you have a nice handle here. And we like to talk about the downtrend line on the handle. You had that going on here. You got your retest in late 2024. It's just been up only since then. And if I'm not mistaken, Colombia is the best performing country in the world. Maybe not the world, but continental America for sure. I'm not sure if it's beating China. Do you know about that, Patrick?
I'd have to look. And
Yeah.
what time frame are you talking?
Just talking about year to date, which is very arbitrary, but it's kind of fun to talk about.
Yeah, well, let's see. I'm seeing Poland's up there. EWD, what is that? Denmark?
Yep.
Sweden.
Yep. All the countries with financials.
I don't think I have Colombia on this dashboard, so it wouldn't show up.
Sure.
But you do have a lot of Latin America up there: Brazil, Chile, Peru, Argentina,
Sure.
as you mentioned.
And I think this is. I'm glad we brought this up. Who brought this along, Patrick?
Yeah, that was one moment. That comes from Nick.
Nick. Shout out Nick. Nick's paying attention. We've been pounding the table on a rotation outside of the United States. And this bull market is really going to broaden to the entire world. And Colombia is no exception to that.
I like it. So this is kind of an interesting little case study here. So Danny wants us to look at TTD, but he wants to ask if there were any clues that this big decline was coming prior to it happening.
Yeah, so this is the trade desk. It's about $37 billion. Looks like they do some advertising, kind of like the AppLovin, maybe. So you had an underlying uptrend in 2020 into a prolonged consolidation, lasted about 4 years, and then you broke out to new all-time highs in late 2024. And this was really the level to watch here. So this is where you peaked in 2020. You failed to break out in 2021. It was a nasty failed breakout. You got new lows, and then it was resistance again here in 2023, 2024. A really well-defined level of resistance, and it comes in right around the 95 level. And so you got the breakout, you were buying this breakout, and you want to know how to avoid this candlestick. And the truth of the matter is, it's really hard to do with stocks because they have earnings events.
Yeah, and I think
Earnings
his
events are,
question is
yeah,
really good because it's getting to a point where, like technicals aren't the magic bullet always, and you do have these risks, right? Like that is a risk that's inherent in stocks. It is these gap downs. And this is one where it's really tough because it did just totally gap down through that level.
for sure. It was really nasty, but once again, you had this level. You saw the market was distributing the stock. I think this RSI was a good tell. I mean, you didn't really register an oversold reading until you got that nasty earnings gap down. But to see the sellers continue to step up at this midline around 50, I think that is interesting to me, and that was kind of an early indication. Let's see if TTD broke down relative to the S&P 500 before this earnings gap. So yes, it kind of did. You had this, so really if you were watching the relative trend, you were out here on February 4th, which was a false start, little 5-yard penalty before you got this big move down. So yeah, that's a difficult question to answer. What do you think, Patrick?
Yeah, I mean, it is just a really tough one, and it's one where, let's say you saw that kind of distributive pattern, that head and shoulders top, if you will, forming right at the neckline there before earnings. That's one where you're gambling on that pattern basically failing. And to do that right before earnings, that's a big call there because it is such a binary event. So that's a tough one. That's really a tough one there.
Yeah. I think Brian Shannon would say you can't own anything that's below a declining 5-day moving average. So I think it comes to knowing your time frame. If you, I want to say like if you like this one and have a longer time frame, like you could theoretically buy more, but God help you if you're doing that, because this looks like a lot of pain. But I think you need to know your time frame. And this one was stuck below this all-time high anchored VWAP the entire time leading up to the earnings event. So there were signs, but yeah,
Totally, yeah.
like you said,
There
it's a
were definitely
binary
were
event.
signs. It's just they weren't glaringly obvious, and
Yeah.
ultimately it didn't give you a chance to get out at the risk level. That's what makes it so tough, I think.
For sure, and
Uh,
that's kind of like why you're seeing this continued bleed lower too, is because it was
Totally,
such a
yeah.
nasty move, and there's a lot of bag holders in this one that just want out of the House of Pain.
Yeah, yeah, and I think that maybe might be the lesson is when you do have an event like that, to just get out immediately, like recognizing the mistake immediately and trying to get out rather than holding on, hoping for that rebound.
For sure.
Because that negative momentum can really carry through for the short term.
Yeah.
Should we look
Momentum's
at?
a real thing, Patrick.
It sure is, sure is. Um, let's move on to Ferrari.
Nice. I love the Ferrari. This thing is
Yeah.
such a beast.
And this was an early cycle leader, and it's kind of making a comeback these last few weeks.
Yeah, it sure has. Let's look at race relative to the S&P 500. Just to show that this thing is a beast. It's close to making new all-time highs. Since its low back in 2016, it has rallied about 400% relative to the S&P 500. So this one has treated shareholders very, very well. Let's look at absolute terms. New all-time highs today. And I think you just keep it simple. If race is above this high from August, September of 2024, then you can own as much Ferrari as you want. And your first target is something like 550. So that is 50 points of upside from current levels, about 10%. But that could happen awfully fast. I mean, look at where you've come from also. Since this January 3rd low, Ferrari's rallied about 20%. And to see it get back to the shelf of former highs and not consolidate, instead you just gapped above it, just speaks to the underlying strength here. This thing is an absolute beast. You can see it's getting overbought. All of the technicals point to higher prices for the Ferrari. And what's more of a bull market vehicle than Ferrari, really? Like, people are getting wealthy and they're buying really expensive cars. It's
There
a
you
classic.
go. All right, let's go to PDD.
So this is Temu, is that correct?
It is, yeah, yeah.
Yep. So
I'm
Spencer
sure we've
thinks
all
this
seen the
company's a
ads.
scam and it's going to zero. Doesn't look that way, but investors certainly have a bias against this company. They really don't like the aggressive marketing that these online retailers do, like Temu. And
Yeah, I mean, listen, Sam, I would never buy anything from Temu, but I will buy the stock.
yeah, and this was an early leader in China. So you like to see that, but you don't really like what it's done recently. China's really come back in a big way, and this thing just can't get out of its own way. It's just churning sideways in a big fat mess.
Yeah, among some of those Chinese stocks, and Yaz mentioned it in his question here. I mean, the PDD is one of the more messy ones, I'd say.
For sure, for sure. But you do have that underlying trend pointing higher. So this is the relative trend. This is what I was talking about earlier and how PDD was an early leader in China. So it rallied about, my goodness, like 650%.
Yeah, I
from
remember
March
this was like the
2022.
only Chinese stock working for a minute, so that's a really
For
good
sure.
point.
For sure. And this doesn't really look like some blow off top. Like, this looks pretty orderly. Like, this is wave one, wave two. We're getting a little wave three down, maybe.
Yeah, and I think in that context of the fact that it was an early cycle leader, you can kind of give it a little bit more of the benefit of the doubt here. It's a little more forgiving how messy it looks, right? Because of the fact that it was such an early cycle leader.
Absolutely. Yeah, I don't really like how it had this big gap down. I'm not really sure what was going on that day. Was that an earnings event, I presume? Yeah, so it fell 28.5% on a mixed earnings report back in August 2024. And really, that is the level to watch. And that happened right at the 61.8 retracement level. I would love to see that happen. That just speaks to the market respecting these levels. And I'm certainly anticipating some bag holders are left at this 140 level. And look at this island reversal you had back in October. You tried to push PDD back above that level. The baggies distributed right here and then ended up pushing it back down into the range. So I think once we get back to this 140 level, I think you want to reassess PDD, and if it can hold on to that level, you're probably looking at new all-time highs before the end of the year.
Yeah. In a line chart, it's a little cleaner of a level, but it is a messy one.
For sure.
And with
Yeah.
these ADRs, and all these gaps, a lot of them can be a lot messier than what we're used to.
Yeah. Line charts are good for ADRs with not as much volume, for
All
sure.
right, well, we got one more in the mailbag, and then we can hit the chat here. Hanson wants to see RCL.
Yeah, this one has been a beast. What is a good? Is it Cruise? Is that the ETF? Yes,
Yeah,
and I'm good.
CRUZ.
RCL relative to Cruise.
I think cruise might have some other stuff. Like, I don't think it's just cruises. I think it might be like hotels and stuff too.
Yeah,
I'll
no, I
check it
think you're
out.
right. I'm gonna pull it up now. Um, Bear with me here. So Cruise has 54 holdings. Royal Caribbean is the largest holding in it at about 8.5%. You also have Hilton, Delta Airlines, Marriott. A lot of these large travel and leisure companies are
It's
in
been a
this.
hot theme. Been a
And
hot
Royal
theme.
Caribbean is making new all-time highs relative to it. So this is probably the best fish in a decent pond. You tend to see these very discretionary stocks do well in bull markets, and that's exactly what you're seeing with this cruise ETF. Just broke out to new all-time highs last November, and it's holding quite well. So I think this is a really interesting place to look right now. And let's fib out. Let's see, we could do this just as a super long-term Fibonacci analysis. So this was a really significant decline here from 2004 to 2009, it looks like. Royal Caribbean looked like a zero, fell 90%. But sure enough, it came back to life. And you can see the market respected this Fibonacci extension level for quite some time. 2017, 2018, 2019. That's where you peaked in 2020, and you finally broke out in early 2024. So this one probably has more upside. This one has been in a rather large consolidation here. So the bigger the base, the higher in space. I think that applies to this one. This is a rather large base. So for a more tactical target, I think you want to fib it out like this. You can see that we didn't really pause here at this 161.8 extension level. We just blasted right through it. We are looking kind of heavy here, so I wouldn't be surprised to see the market come down and retest this 206 level. But I think that is the buying opportunity right there. You buy the fucking dip in the Royal Caribbean if you get it at 206, target 322. I like this.
Go.
Who brought this one along? They need a shout out.
That one comes from Hanson. Shout out.
Hanson. Love it.
All
Not
right,
everyone
let's
looks at the cruise lines. This is kind of a niche industry group. So
let's
fun to mix it up, not just look at software stocks the whole time.
yeah, right. Let's hit Wavy's idea here. Let's move on to the chat. Let's go to WPM, Wheaton Precious Metals.
Ayo. Wheaton Precious Metals is an absolute beast. It looks exactly like gold futures. So I'm going to show you what that looks like. So let's log the gold futures, show both on a line chart. You can see they're twins. So Wheaton Precious Metals is not it's not like the rest. You can look at it relative to something like the GDX, which I understand is a pretty bad benchmark. If you look at just about anything relative to GDX, it looks good. But nonetheless, Wheaton Precious Metals has dramatically outperformed its peer group in the GDX. It's rallied about 1,300% since it bottomed in 2008. So that is a lot of outperformance. You'd love to see it. And here you are making new all-time highs. I think you can, depending on your time frame, fib it out multiple ways here. So you have this bigger base from 2011 to 2015, and that target is being achieved right here, right now. It comes in at $70. And you can see that we've already, I think I would call this the first time it achieved that first extension level. So like I hesitate to say that this one needs to consolidate here at $70. Like this kind of looked like the consolidation. So like I think this one is ready to rip higher towards 100, and I think you'll get that $100 roll effect. You're looking at 108 on the Wheaton Precious Metals. I think this happens in 6 months or so. You know, this one has a lot of momentum behind it. I think there's no reason for this one not to head higher. I think if you want to be more tactical with it, you could just get long against this pivot high from October, which comes in right around 68.5. But this one's looking great. Thanks for bringing this along, Mr. Wavy. Shout out. Always bringing great bases. He knows how much we like these charts.
Absolutely. I want to hit 2 more tickers, and then I want to end on Natty Gas, and
Yeah.
and then I got a request for you as well.
Sweet.
Let's hit up PODD real quick. PODD.
Yes, so this is Insulet. This is a
Medical
$20
special.
billion. They do a lot of insulin pumps. So their largest competitor is Dexcom, and PODD is whooping their ass. Look at PODD up about 225% since it bottomed in March 2024 relative to Dexcom.
Whoa.
So that's a lot of outperformance in a very short amount of time.
Now, do they make the insulin, or do they?
No, they
make
don't.
the
They make like the
devices?
insulin pumps
I
and
see.
accessories like that, which is it seems to be a great business. You know, this one has. Let's look at it relative to the S&P 500. It has had a pretty large outperformance over the last decade. However, you have seen some pretty significant weakness here recently, but this could end up being a failed breakdown relative to the S&P 500. Around Christmas, and here you are, refusing to go lower. You know, this just it looks like it wants to go higher and fail this breakdown. So I love that setup, just on a relative basis. And then you look at it in absolute terms, and I think if you aren't long at this point, it's probably difficult to enter the trend right here, right now. I think you could buy a pullback to this 256 level. You saw the market blast through that level on an earnings gap from that was the Q4 2024 earnings report, and then you came back and retested it in December. So this is a very well-defined level of interest here at 256. If you get a pullback, you buy it. If not, then I think you can just buy the breakout above this shelf of former highs from 2023. But I think that is where this one's heading ultimately, and probably new all-time highs. You're looking at 465 if you get above that shelf of former highs from 2023.
Nice. All right, let's do Iran.
So this is a Bitcoin miner, if I'm not mistaken. Almost $3 billion in market cap. And it looks like maybe they're not a Bitcoin miner anymore. So they're kind of like one of those companies that they switched from Bitcoin mining to I don't know what you call it, being a AI data center company. That's a classic move.
And they changed their headquarters to China too.
Did they really?
No.
You're making that up.
Yeah, I did.
Yeah, this one's from Sydney, Australia. I don't know a lot of Australian companies.
Shout out to Sydney, Australia. What about Rocket Lab? Didn't we got in a big argument in Chicago, I remember, about Rocket Lab and whether they were New Zealand or what. And we should have just been buying that stock at the time because that thing was
No, they're from Long Beach, California, Patrick. I just think
Rocket Lab?
they do a lot of testing in New Zealand.
I see. Okay. That's where the debate
Yeah,
sprung
because we
from.
have so many regulations here in the United States. They don't just let you fly
They don't
rockets
just
all
let
over
you
the
blast
place.
rockets up.
Yeah, that's probably not a bad thing. But anyways, this is quite the nice setup here with the iron. I think this, yeah, man, look at this. So clean. So this is the 61.8 retracement of this drawdown from 2021 to 2022. The drawdown was about 96.5%. That was pretty gross. But this one really has come back to life. It has rallied about 1,500% so far this cycle. And here you are. It's not the cleanest, but I think you can call this some type of cup and handle. Base on base structure, whatever you want to call it. This is a very bullish formation, and to see it respect these Fibonacci retracement levels makes me like it even more. There is a clear line in the sand. Your risk is very, very well defined, and the upside potential is pretty huge. So
Yeah.
if this one is above, it's a range here, so it is what it is, but you're gonna have to risk a little bit to get the biscuit. So 15.5 to 18 is really the breakout level. But if it gets above that 18, you're looking at $28, and that is about almost a 60% move, and I think it could happen. I want to say it could happen in just 1 week. You could just get one weekly God candle, send it to 28. I wouldn't be surprised if that's how this one played out. But I love this setup. Shout out
working in the
whoever
right
brought this one
direction.
along. This is probably my chart of the day.
And I'm looking at the relative strength in here, like looking at the Bitcoin mining ETF, WGMI, and in the last 12 months, IREN's the best in there. So to your point about the outperformance, that is interesting there.
For sure, yeah.
I mean, Bitcoin's been just like taking its time, lollygagging, and you look at those two last weekly candles, you wouldn't know that.
For sure. And it's really like not a bad business, the whole Bitcoin mining, but a lot of these companies just dilute the shit out of their shareholders, and that makes it really difficult for the stock price to go up. So like if you can find a good company that has good management and isn't punishing their shareholders for holding it, like Iron seems to be doing, then I think you gotta own it.
We're always talking about contending with overhead supply, right? But contending with supply coming from the company itself.
Yeah, that's just not something I want to be involved in. You know, a lot of these companies are quite gross, in my opinion.
So Sam, I know, and to our viewers, I know we didn't get to a few here. Grab, we checked out last time, MindMed. we'll get to those next time. But I want to end on Natty Gas. We got a couple of questions about Nat Gas. And then a ticker that you put on my watch list a couple weeks ago, this CRK.
Yeah.
So why don't you start with Natty Gas?
Yeah, so we have a beautiful textbook trend reversal here in the natural gas. So you had,
Do you think it still has juice, or
dude, come
that a
on,
flash in the
yeah, I
pan?
think natural gas is going to like $10.
yeah?
Could happen by the I don't know how long it takes. Maybe this year, maybe middle of next year. I think.
I mean, if
12
it keeps building
so
this
months.
base, then by the end of the year isn't crazy. Yeah, it could
And
happen.
look at how it moved last time. Like you got above this level in December 2021,
and drop a whop from the peak. I mean, I really like how well it's respected that.
yeah. So this is what you're talking about here. So it peaked back in August 2022. It really peaked for the first time in May 2022, and then you got a failed breakout in August. It was pretty gross. You saw an 80% drawdown in just a matter of a few months. Ultimately, it was an 85% drawdown, but they really kicked the Natty Gas hard. And you have a super well-defined level of interest here. This was the level to buy in the last cycle. You would have made 150% in just a few months if you bought here, and then you came back to this level for the first time in the winter of 2023. Failed miserably at the VWAP and at this level of former support, and here you are trying to resolve this base. You've tried once, failed miserably, but they couldn't knock it back into the range. They stepped in and bought it right at the VWAP. So this one screams trend reversal to me. It looks like it's ready, no doubt about it, and the upside potential is pretty fabulous in this one. I see no reason for it to not go towards that.
Yeah, and
$10
Sam,
level.
forget all the preconceived notions about Natty Gas,
Yeah.
Widowmaker, all that, and I mean, just this pattern, right? How many times have we seen this pattern recently? It seems like a lot of just the other reversals that are going on, whether that's ARC or things like that.
For sure. Let's just overlay Natty Gas with ARC. Um,
Only
just
here
to
on
show-
CRL.
Yeah. We're cool. Technicians are the only ones doing stuff like this. Fundamental analysts don't have as much fun as we do. But
I will agree with that. I will definitely agree with that.
yeah, dude, come on, we're a lot of fun, Patrick. But no, this is exactly the type of environment we're in, where these bearish to bullish reversal patterns are resolving. They've had plenty of time to build constructive bases. This one's had like 2 years to base out. And let's look at the CRK. So this is probably the best vehicle.
And wait, is this Jerry Jones? Who's in this one?
Yeah, so this is Jerry Jones's stock. He was buying it back down here. I'm not
Wait,
sure.
he owns the company? What's his relation?
No, he's a large shareholder. I'm not
Okay.
sure how much, but it showed up on the hot corner like every single day for like a 2-month stretch. I believe it was back here in early 2024. I think he was buying this dip like a boss. But he's the Dallas Cowboys owner.
Most valuable franchise in
Yeah.
sports history.
Yeah, no, he's a real gangster. And why I say this is the best vehicle for and best equity vehicle for exposure to natural gas is because this UNG ETF sucks.
Oh my
It's
gosh,
so
yeah,
bad.
what a dog.
And it's just built wrong. Each
And wait,
time
why is that? Why do you say that?
Well, just each time the contracts roll, this company or this not company, this fund loses money. So like it's penalized each month
Right, I mean,
when the
yeah.
contracts roll, and that's
Yeah.
just you don't want to be involved with that unless it's just a day trade or I wouldn't hold this for longer than a week. because look at the long-term trend. This thing tends to get slammed. So ultimately, that's why I like the CRK, because there's not a better equity vehicle out there, and it looks very similar to the natural gas, and you have a super well-defined level of interest there at this shelf of former highs from 2022. Let's call it $20, a nice round number. And you have a pretty significant memory gap here. You know, we've been talking about stocks like the Shitty Bank. It's just been in a prolonged basing pattern, and it's just now looking ready to fill this volume pocket from the Great Financial Crisis. You know, these volume pockets tend to get filled quickly. Here's one that just happened recently. This is what I'm kind of expecting it to look like, is you break out of this, and then within a matter of a few months you fill this memory gap. This is a precious metal stock. It got cut in half in a single day in early 2024. So there was no trading at this level. So once you entered that gap, the price was just sucked higher like a vacuum. So yeah, I see no reason for CRK to not look like that. And I think that's you're talking about $145, $150 CRK within the next few years, and that's like 600% upside. So I think this is a really interesting play if you are bullish on natural gas, like we are.
Yeah, Sam, I like this one a lot, and thank you for bringing it in it or putting it on our radar. You know.
For sure, yeah.
Well, thank you guys all for joining us and listening and dropping your tickers. I know we didn't get to all of them, so be sure to come back on Monday and we'll touch on them. I see Grab in there. I see MindMed. I see ET. Shout out Optionist. ET, that's been an interesting one for sure. Big base.
For sure. And this is just the environment we're in right now, Patrick. A lot of things are working. It's a great time to chart things out on Chart Request Live. So I'm super
Totally.
excited for Monday.
Yeah, absolutely. Thank you guys. We'll see you soon.